Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the Aussie versus US dollar. This currency pair has been trending to the downside over the last few weeks of trading. Actually, going back to July 14th, the price high at that time came in at 0.68942, and the price low reached down to 0.65135. So that's about, I don't know, 370 or so pips or 80 pips of move to the downside over this time period. Not a bad move in the process. Most of the time period was spent below both the 200 and 100 hour moving averages. Those are the green and blue lines in this chart. Admittedly, the price did move above the green line right here and broke higher, and it should have extended to the upside, but it failed, and the price, when it moved back below that 200 hour moving average, saw the price move to the downside. This move to the upside saw the price stall in between the blue and green lines. And in trading on Friday, the price moved above the blue line, which was the 100 hour moving average, and once again the market failed and rotated back to the downside. So that brings us to today, where we're seeing the price move higher and test that blue line right here, that 100 hour moving average at 0.6583. If we move above it and stay above it, it's more bullish for this pair from a technical perspective. The buyers are showing that they can take back some control from the sellers that push the price to the downside here. If it fails, if it breaks above and fails like it did on Friday's trade, that would not be good, and then the sellers would take more control. And if now the price, the sellers would lean against the 100 hour moving average, so you have a choice. You can put your risk on a move above that level and hope that the price breaks below this trend line and below this little swing area here where we had a number of different little swing lows and swing highs over the last few trading days. And that would give you more confidence of a break back down toward our low price at 0.6513. So, you know, when we get to these inflection points, these points where there's a key barometer in play, like the 100 hour moving average, you got to use it to either define a more bullish bias or define a more a continued bearish bias. So pay attention to this level. If the price moves above and then gets above the high price that we saw on Friday, we could see a move toward the 0.6622 level. Also the 0.6635 level is in play. These levels correspond with different swing lows and highs that occurred in this area over the last few weeks of trading. So this area is going to be a key area, as is the 200 hour moving average and the 38.2% retracement. Ultimately, if the buyers are going to take more control, not only do they have to get above the 100 hour moving average, the high price here, this swing area right here, but they need to get above the 200 hour moving average and the 38.2% retracement of this longer term move to the downside. It just makes sense, doesn't it? If you can't get above the 38.2% retracement, are you really winning? I don't think so. The sellers remain in control. So buyers are trying to make a play. We'll see if they can get above the 100. We'll see if they can continue that move and continue to work at picking away at that advantage by the sellers. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.